Good evening, everybody. This is Andy Pedraza with Special Effects Academy on the start of the week session of the Forex Trading Room for February 24th of 2019. We will be going through our usual agenda with one change, which I'll explain along the way. That will be the prior week's results, our currency strength meter, fundamental announcements, analysis of the major pairs, any setups we see in progress, short-term, mid-term, long-term, and a few parting words. We'll start off with our past week's performance on the long-term ledger. Not much change. We had a few losing trades closed out, and we remain in several trades that are working quite nicely for advantage. So the results don't look as good simply because we have open trades that we're carrying. So until those are closed, well, it's going to look the way it looks. On the short-term account, not a good week. We had a couple of hundred pips negative on the short-term trades. Of course, these are smaller size positions. We had some good wins with the Aussie pairs as the Australian dollar suffered a few hits, both on fundamentals as well as a brewing trade war, trade spat rather, with the Chinese. That is probably expected to continue affecting the Aussie in the near to midterm. So as I said, we had 230 pips negative on the short term, and the long term was essentially, well, it is what it is. We have several open trades with profit, even profit protected in some cases, and a actually pretty good outlook based on what we're seeing in the market right now. Notes and opportunities for improvement. We have seen a lot of sideways volatility, especially in pairs such as the pound pairs and the Swiss pairs, with them going in both directions. So a lot of sideways movement, but some of these channels, even though they're sideways, can be pretty wide. That means there is a pretty good possibility of being wrong even when you're right, as the market zigs and zags in a sideways pattern. So until we see a good breakout from some of these channels, we will be trading a little bit more cautiously, but still trying to set ourselves up for one of these bigger moves when there is a breakout. We did miss one of the Euro-New Zealand drops towards the end of the week. It dropped in excess of 100 pips on Friday. We were out of it at the time, so unfortunately you can't catch everyone. The Euro New Zealand in particular has been a really, really good pair for us this year. So it looks like we missed that one for now. We're already back in as of the open of today's market in the same direction as we've been trading it all year, short. And it was at a small amount of profit already as we started this session. So too soon to tell whether we've latched on to the next move, but it is looking like a pretty decent drop is in the works as the Kiwi strengthens, as well as the Euro sees some weakness. CAD, the Canadian dollar, is also gaining a lot of ground as oil continues to recover. So that's another one that we're going to be keeping a close eye on, all these CAD pairs. And for the medium to long term, we're going to be focusing mainly on the pound because of Brexit, on the Canadian dollar because of oil recovery, on the Australian dollar because of what I mentioned earlier with some of their fundamentals being out of whack, as well as a trade spat that's going on with the Chinese, and the Kiwi simply because the Kiwi has been staging the biggest recovery it's had in more than a year. So it looks like it's bottomed out and might be ready to attempt to go back to its previous highs. So too soon to tell there, but we will be trying to enter some of these likelier positions in the next few weeks. Open trades on the long term are looking pretty solid with some of the gains already being protected. We're trying not to go overboard on these. That is to say, our stop losses are not going to be too close to price action, since we don't want to be taken out too early on a big move. And our immediate plans are to start using scaling in as a strategy, as an entry strategy. so that we may enter some of these positions, with a smaller lot size. And as they start moving in our favor, we will add to those positions, which is how you get some of the bigger gains when you get into some of these trend scenarios. And last but not least, on the short-term account, we have no carry over the weekend. All the trades were closed on or before Friday's close of market. With that, we're going to move on to the currency, the relative strength meter for the week that just ended, as well as the last 30 days. So volatility on the last 30 days has gone down a bit. It was at 4 something. It's now down to 3.42. So volatility is dropping on the monthly, and it also dropped on the weekly. And this is pretty much what you would expect when you see a lot of sideways action. They move all over the place, but at the end of the week, they're not that far away from where they began. So that is the drop of volatility. Looking at the prior week, we can see that the Australian, as expected, based on what I said, was one of the losers. It lost ground against everybody except the yen and the Kiwi. The Canadian was a pretty good winner, losing ground only against the pound. The Swiss franc was pretty middle of the pack, as was the euro. The pound was the big winner overall, as it actually recovered some of the losses it had suffered the week immediately prior on these Brexit issues. So again, as I said, it's been going sideways. It's bouncing in a rather wide 200 to 300 pip range. And last week, it definitely went towards the top side. The yen, the clear loser, dropping against everybody except the Kiwi, and the Kiwi another loser for the week, as it lost ground against everybody else based on where it was the prior week. As I said, it did stage a nice bit of a recovery on Friday, but not enough to wipe out the losses it suffered at the beginning of the week. Dollar also middle of the pack, gaining ground against the Aussie, yen, and Kiwi, the big losers of the week, but losing ground against everybody else. Silver was pretty good, gaining ground against everyone except the pound. And gold also had a pretty decent week, gaining ground against everyone except the pound, silver itself, and the Canadian dollar. Our fundamental calendar for this week that is beginning has a couple of interesting things here. So on Tuesday, very early in the morning, 7:30 a.m. Eastern time, we will have Theresa May, the UK's Prime Minister, give a speech that will obviously be closely tied to the Brexit. So that's one to keep an eye on. And we will be up at that hour and trading that one live. So Tuesday, the trading room will be open probably about 15 minutes before the speech begins. So 7:15 a.m. Eastern time. That will be clarified on the email summary we send out so that we can trade that live. We also have testimony from Fed Chair Powell going on both Tuesday and Wednesday. I marked Wednesday as a fundamental. I'm not sure that we're actually going to be trading it. I'm going to see if there's any merit to doing so between now and Tuesday. I'm not sure exactly what he's testifying about, but usually these are sort of things when they're long running. If he's testifying, it's probably going to be in front of Congress. And if it's going on for 2 days, there's probably not going to be any punctual opportunity to be trading this. It'll just play itself out over the 2 days. Those are the only two that I'm planning on trading live. And again, that second one that is still to be decided. We have a few other things coming out. The GBP out of the US annualized coming out on Thursday. We have Tokyo CPI excluding fresh food year over year that same day. And on Friday, we have CPIs and CPCs coming out of the Eurozone, as well as the United States, along with the manufacturing PMI. So worth keeping an eye on, but not to the point where we're going to be trading these live. So that is the calendar for the week. I will start our charting with oil. Oil continues to actually have a splendid recovery. So it had already crossed the cloud when we did last week's session. It has continued in that same direction. So it's now getting further and further away from the Ichimoku cloud on the daily and following a nicely angled trend line on its way up. The immediate target that I see for it based on prior support resistance is around the 64 area. So it still has about $7 to go before it gets that far. This is worth keeping a close eye on. For one, of course, it's going to affect the Canadian dollar, but more importantly, it could turn on the drop of a dime. So you want to be keeping a close eye on it, especially right now. We have at least 3 Canadian trades open, and they're doing well. They're carrying profit, but we want to be very careful we're not suckered in to a reversal, even if it's a temporary one with oil and it wipes out some of those gains. So I'll be keeping a close eye on oil as we go along. And with that, we're going to go into the rest of the charts, the currency charts. And here is the change I said I was doing for this session only. Every now and then I look at longer term charts, and this is one of those now and thens. So this weekend, we're going to be looking at the weekly charts just to get a better idea of the longer term moves that some of these currency pairs are undergoing right now. So starting off with the euro dollar, we can see that that's a very nice bearish chart. It has been dropping at least since 2011, which is the extreme left of the chart. It is now at a prior level of support resistance around the 113.5. And it could still drop. Well, it can drop as far as it wants, but we have the next point of support resistance down near the 105. So that is still a decent distance. We have been seeing weakness out of the euro, but at the same time, the dollar is not having its most glorious moment either. So this could still turn in either direction. It looks like we're at the tail end of a wedge, and it may break out either way. I'm banking on it dropping further, so that will be my bias on the euro dollar, that it could stand to drop another, I don't know, 800 pips or so before it finds its bottom. But we will be very cautious entering these trades. I need to be convinced before I enter a long-term trade with that sort of an aggressive move. Pound dollar, even though we're looking at a chart, of course, the pound is driven more by the fundamentals right now as Brexit plays out than anything else. We're looking at a significantly bearish chart as well, very much off its prior high back in 2014. It has been dropping consistently. Some of those bigger moves that we can see in the chart, of course, are the Brexit vote, as well as some flash crashes along the way, the US election, this and that. After dropping to a new low around the 121 back in 2017, it did stage a decent recovery that lasted for the remainder of that year, hitting the trend line, bouncing off of it. It's now about midway between its most recent high and low. Obviously, I'm bearish on this pair. I think that Brexit is still going to negatively affect it. And there is an opportunity here as well for about 800 pips on a Brexit drop. But as I mentioned before, it's been in a very, very wide sideways pattern, moving up and down 300, 400 pips at a time. It's not the easiest pair to trade. And that applies to all the pound pairs. But in general, the bias for this one is definitely bearish. Moving on to the USDJPY, also a bearish chart. We have had the yen looking better against the dollar over time. It was at its weakest back in 2015. It suffered a pretty amazing drop in about a year, all the way back down to the 100 level, before making its way more than halfway back to the 118, and since then slowly but surely dropping. I've always considered 100 to be the natural stomping grounds of the yen against the dollar, and it's about 950 to 1,000. Actually, it's 1,000 pips away from that bottom. So some nice opportunities there as well. This will depend more on the dollar weakening than on the yen getting stronger, however. And there is a pretty good opportunity to see dollar weakness in our future, not necessarily in the short term. But in general, longer term, I am somewhat bearish on the dollar. So this is also a chart that I'm quite interested in keeping track of. USD Canadian, a very bullish chart. So we have had the Canadian weakening against the dollar significantly all through 2015 before it stages somewhat of a recovery between 2016 and 2017 and then starts going back up. So it has bounced off that trend line. It's still definitely in a disadvantageous position against the dollar, and it does have some good opportunities, and we've been tracking them based on the oil price recovery. If we see some decent recovery out of oil, this could go back all the way to around 125. And of course, I am very interested in such a move that would add quite a significant chunk. So we're looking at several good opportunities for longer term trades on just the very, very major pairs that we've been looking at so far. USD Swiss, a very sideways chart. Yeah, USD Swiss does love to be in a sideways pattern. It's currently around the top of its most recent range, with the bottom being around the 0.95. So it's got about a 500 pip channel between 0.95 and 1, and it is trading at the top of that range. This is one that we're short in. And we will remain short for as long as it takes. It's so long as it doesn't break out of that inner channel, we're good on that trade. Aussie dollar, this is a very interesting chart. Of course, we have seen the Aussie lose ground against the dollar pretty much since 2011 through today. It is very near its historic all-time low around the 69 area. It's about 200 pips, 200 and something pips above that. So it pretty much bottomed out. Last week, however, had the Australian dollar see quite a bit of bad news hitting it. We had some fundamentals on their economic outlook that definitely didn't look good. And towards the end of the week, there was also a spat between the Chinese and the Australians. China imports a lot of Australian coal, and what they actually did was refuse at least one shipment because of some perceived insult from Australia. Now, the Chinese and Asian cultures in general place a lot of value in what they call face. So you'll hear terms like honor, dishonor, and stuff like that. So nothing really happened other than some Australian politician made a negative comment about China and human rights, and the Chinese decided they didn't like it and they retaliated. And of course, the way that China retaliates at any point in time, other than nuking you or something, is going to be based on trade, because they are one of the biggest trade partners anybody could have on the planet. And in this case, they did use that clout to punish Australia. The question being, when is that going to end? Because that is what is adding most of the weakness into the Australian right now. Can it go all the way to its prior low or even deeper? Of course it can. And it is following that downward trend line very nicely. But it is going to be very much dependent on what the Chinese do in the short term, or whenever they get around to doing something about it. Kiwi dollar, another significantly bearish chart. So we have a high that's been visited multiple times between 2011 and 2014, after which it crashed all the way to the bottom in 2015, made its way less than halfway back up, and is now yet again moving its way towards that historic low. So we're still seeing a very bearish chart. However, Recent movement on the Kiwi are showing signs of it waking up. And if it breaks out of that, the upper trend line, the one that's dropping, it could shoot all the way back up to that prior level of support resistance in the mid 70s, which would again be quite a significant move. So we'll keep an eye for any of that happening. And it's always good to look at these long-term charts to get an idea of the potential that's out in the market. But again, until we see one of these moves actually happening, I would be very reluctant to jump in without anything to indicate that the time is now. Aussie Canadian, this is one of the more chaotic charts that we have in the market looking at these weeklies. It's all over the place. Obviously, the Aussie is weakening, and it's significantly off its high from back in 2011, and very much a bottom feeder for the time being, a bottom that it's visited 4 or 5 times already, and it seems to be getting ready for another one. If we see that oil recovery, that's only going to help, and it should go all the way to the bottom, but that bottom isn't that far away. So we're seeing an opportunity of maybe 300 pips on a good day, and I love 300 pips, don't get me wrong, but this one has limited downside, and if anything changes, it could very well shoot back up with a vengeance. So I'll trade it down. That is definitely the direction. I already have an open trade on this one, and not the first time either. But this one bears a little bit of caution, because if the Aussie ever comes out of the doldrums, this thing has, well, it would be a very dangerous pair to be short on if and when that happens. Euro Swiss is a very odd chart. The Swiss was pegged to the euro for a long time, and some of the, especially that big event you see in 2015 actually, that huge candle was when they unpegged it from the euro. Since then, it has made its way back up to the top and then slid back down. It is coming out of a wedge towards the top side. It's too soon to tell whether it's going to go back to the previous highs around the 120 area from 113 where it is right now. Bears looking at. I think it's far more likely for it to retreat and go back towards the bottom. That is Swiss strength against the euro, and its next stopping point for that to be even a possibility is probably going to be around the 110. I am looking for shorter term opportunities to sell this pair, so I'm definitely bearish on it, but as you can see from the chart, not the easiest pair to trade long term. Moving on to the euro pound, and this is one of those obviously very much influenced by Brexit. It's been in the sideways pattern, and it is currently on the lower edge of that sideways channel. We're long on it. We've been long for a couple of weeks. We're less than 100 pips underwater right now, and still a nice way to go before the stop loss. The bottom seems to be holding, so it has found support where it's at. And the payoff is going to be about 300 pips if it goes all the way back to the top of the channel, which it hasn't visited since some point last year. So again, longer term trade, definitely a bullish chart. It's much nearer to the top of the chart than it is to the bottom. Actually, it's nowhere near the bottom, very close to the top. So this one is definitely pushing up, and that is the direction we're trading it. Of course, Brexit will have the final word. Whatever ends up happening in the next 30 days as the Brexit deadline expires is going to tell us what this pair is going to do. EUROJPY currently in a bearish cycle. It is following a downward trend line, which is what you would expect as some of the money in Europe flows into Japan for safekeeping. They are the safe haven country and currency for the Europeans. It's at a very interesting point because it is halfway from its most recent highs and lows. It is heading down, and if everything plays out the way logic would indicate, which is that Brexit will be a shambles, then this one has a potential for about 1,200 to 1,300 pips as it revisits the lower level of support, which you can see on the chart, the lowest horizontal line I've drawn. So this is another one that I've always been keeping an eye on, but you can see some of the spikes that it does are definitely scary, especially if you're trading in the wrong direction at the time. So bears looking at, but always with caution. So we are going to end up trading this one at some point. I'm positive about that, but it's going to be under our terms and not the markets. Euro Canadian, another chaotic chart, definitely bullish, and it is towards the top of the chart right now. But it also has it does some very wild swings. Some of them are even spikes. You can see some of these weeks are outrageous. It is at a level of support, so it is near the bottom of its most recent channel. However, with the recovery in oil prices, I would expect this one to drop to the next lower level, which is around the 143 area, which is also quite decent amount of profit, about 600 pips. So on the weekly, I'm looking at a break of that support to start trading it. Just remember that anything you trade in such a long-term chart is by definition going to require some stops that might not be for everyone. So bear that in mind as we set these up. Pound JPY, this is a very nonsensical chart, really fundamentally driven, and it's been in a sideways channel since pretty much since the Brexit vote, going as high as the 156.50 and as low as the 133.50. That's a pretty wide channel, and it's currently about halfway from the bottom as well. All things being considered, with Brexit, I would expect this one to revisit the 133.50, that lower level of support, and we will also be keeping tabs on this one. AUDJPY, as with all the Aussie pairs, definitely a bearish chart as the Australian has lost ground against everyone off of its high from 23rd of December 2012, when the world ended last time I checked. That was the Mayan apocalypse. So somewhere at the end of 2012, beginning of 2013 was its highest point, and since then it has been trending nicely down to the tune of thousands of pips. It's pretty close to a very strong level of support around the 74.50, which is the bottom horizontal line on this chart. And it is off of that by about 500 pips. It's gone lower. In fact, it spiked a few weeks back and went all the way down to, I don't even know how far down that is, but it had a huge, massive spike. And it could very well revisit that prior low. I seriously doubt it, but 74.50 is a pretty good level of support, and indeed it's making its way there. So another one that we will be watching. We're already short on this one based on last week's Australian issues. We'll see how long we remain in those trades as they continue to evolve. But at some point, I will definitely not be against a longer term position looking for that 74.50 as our target. Euro New Zealand, you can see this year's action and how often we have traded this pair. That final leg there on the chart full of red and blue arrows, that's the beginning of the year through today. It is sitting at a prior level of support, which I've been waiting for it to break since the beginning of the year. It's gotten close to it, it's touched it, and it's retreated, but it is still making its way down. Once it does break, this one has brilliant opportunities on the daily and weekly charts, with the immediate target on the weekly being as low as the 152 area, just as its next level of support. And of course, it could go even lower. So this is one that we really traded this year, and I see no reason to stop that. We missed a pretty good move on Friday simply because it happened too fast. But in general, this is continuing to be a nicely evolving and nicely productive bearish movement it's currently in. Once it breaks out of that channel, the 163.25 area where we have support drawn right now, then definitely this is a long-term keeper. So we'll probably start putting money on the Euro New Zealand for a longer term move instead of jumping in and out, which is what we've been doing all year. And don't get me wrong, that's worked out wonderfully for us. It's added hundreds of pips of profit. But at some point, I don't want to be micromanaging these things. I like to latch onto a big move and do a set and forget and just wait it out 3-4 months and pick up a couple of thousand pips at a time. Pound Canadian, another one that, well, it's a lovely looking chart with some nice areas of support resistance, but really the driver here is going to be purely fundamental. Brexit on one side, oil prices on the other. Currently trading towards the top of its most recent channel. And, well, I have high hopes that it's going to go down to the next level of support at some point around the 164.50 area. And right now it is trading a good 600 pips above that. So I've been shorting this one very cautiously for a while. Mixed results. We've had losers, we've had winners, and we're still waiting for that big move, which gives us the big win. It's coming, but you don't know when it's going to be coming. And last but not least, we have our pound Swiss, another really odd chart. As I keep mentioning, the Swiss was pegged to the euro for a long time, which made it be very sideways against most currencies, or at least closely correlated to the euro, since that was the driver. Once they unpegged, you can see how it broke out of the channel, then went almost, but not quite, towards the bottom of that channel before collapsing again, currently about halfway through. And again, this is one that can easily drop to the prior level of support on Brexit, but we need that fundamental push for that to happen. So between now and then, all we can do is set ourselves up, short it every time it gives us a short opportunity, manage to trade, and hope that one of those times is going to be when it drops 1,000 pips or whatever that distance is, about 800. And that is the end of my charts for the week, setups in progress that I see right now. The US dollar is still very ambiguous, so by all means trade it, but trade it carefully. Euro continues to show that fraying at the seams across multiple pairs, and the Euro New Zealand is still your best bet in taking money out of the euro. The pound pairs, I mentioned this before, high volatility and very wide sideways bounces have become the norm. This makes it a very dangerous yet alluring currency to trade. We can see opportunities that pan out in a single week in excess of 200 to 300 pips, but are you going to be in the right direction when these happen? We've not had a good record in the last month of timing these entries into the pound pairs. So we're doing it a little bit more cautiously. I don't want to abandon the pound. I still want to take money out. And it's not been a lot that's been lost on the pound. Don't get me wrong. We've had wins as well as losses, but the losses so far have outweighed the wins. So we're going to be doing things a little bit different as we scale into some of these trades, so that when we are in the big winner, we're not going to get as much money as if we had been, I guess, living on the wild side, but we're going to get some more consistent results out of it by scaling in. Aussie New Zealand pairs, closely correlated, but right now they aren't. So the Kiwi is back in play. The Kiwi is still doing a little bit of a strength play, and the Aussie has gone in the opposite direction as it suffers from the bad fundamentals as well as the trade issues that are brewing with China. So I'm very interested in both currencies, but forget about that correlation for a while, because they do seem to be starting to diverge. And last but not least, the CAD pairs, always of interest to me during times when oil is either crashing or recovering. And right now it's definitely recovering. We may indeed be at the very start of a Canadian bull season where the CAD regains strength it hasn't seen in a few years. If and when that happens, that's going to be 500 to 1,000 pips per pair that we're going to be able to take out of the market, provided we're ready for it and we're in those trades. And last but not least, we're about a month away from Brexit. So the end of March is the Brexit deadline. We're at the end of February. And while we shouldn't ignore other factors, and there are many, we've covered quite a few of them in this presentation, Brexit is going to be taking center stage as this deadline expires. And the pound is going to be highly volatile as a result, which I've stressed throughout this presentation. So the pound is going to be a really fine currency to trade, provided you get the timing and the direction right, and that's not as easy as it sounds. And if all that frightens you, if that's, and I fully understand that, if that's too much volatility or too much risk, then there are other things to trade. You don't need to be trading the pound just because Brexit is happening in a month. All the other currencies are moving at the same time. So don't take on more risk than you're comfortable with. Look before you leap and look both ways before you cross the street. That is the end of my start of the week presentation for this week. Do we have any comments or questions from anyone? Okay, then that is a wrap, and I will be back next week. Well, I'll be back this week with our regular trading sessions, but we'll be talking between now and then. But this is a wrap for the start of the week presentation. Thank you very much.